Well, here we're looking at the Dow Jones Industrial. We do see prices really got hammered today from the 17,200 level, and we see it coming into the 50-day moving average right near the prior pivot low. This is going to be very important. You also see this, testing the 50-day, also the stop that we have here, and we've been seeing some significant divergence in the long term. We talked about that. I also talked about this volume back in the day, saying that sometimes you see major turns when you're seeing capitulation in that, such as that. And now we saw nothing but a continued down move since then. And what was very concerning to me though, and I had to at least point it out and get a little bit concerned, was when we saw this bar yesterday. I saw the break over a lot of the price action, and so it was really one of those situations where we had to anticipate a reattempt to the new high again. Unless we really see a change in that, you have to anticipate that. But what right from the open, you could see the weakness in the market. You just was not ready for it, and it doesn't matter at that point. I think if we start to see the break through this 16,900 level or 16,800, that's the other support level. We start to see it through this main area here. That's going to be a big problem for the overall market because I think we'll see a very significant move to the downside, and I tend to think that that's going to happen anyway. I just think it's a matter. I think it's been a matter of time. We've talked about the divergence that's been happening in this market for quite some time. Look at the amount of energy that you start seeing just dissipating out of the marketplace, and I think that that's going to come into really play to the downside and really could start to bring this back into some normal territory. But on the short term, I just think this is way, way overdone, and everybody's just trying to find good reason to be long this market, and I just think it's very, very difficult to find one here.